Hello, I'd like to take a couple of minutes and share with you some educational content regarding a principal protected market linked note. This is something we're doing here at Bander Wealth Management on behalf of clients, and we'll be doing in the month of April. I'm going to provide just a little bit of context behind this type of investment vehicle. It's in the same vein of us working with many of the large institutional investments and doing a note. This is a debt instrument. So we are loaning money to many large financial institutions on behalf of clients here at Bander Wealth Management through the use of creating our own CUSIP, which is essentially like a mutual fund, but just on behalf of clients here at the firm. And so these investments are available to many high net worth or ultra high net worth clients and many of the institutions. And so they do have minimum investment amounts. What we've done here at Bander is through the use of a mutual fund or a CUSIP number is instead of going with one investor at $5 million, we can go with 100 investors at $50,000, for example. So we're inserting these into our actively managed portfolios on behalf of clients. This does provide us some protection. It's a principal protected, meaning that if $100,000 is invested, we have a guarantee from the issuer that that $100,000 will remain intact. And then our upside opportunity is based on the S&P Futures Index. Allow me to explain. Those are the main reasons that we are considering this type of investment. Now, we need to be aware of the credit risk, certainly the institution giving the promise, also the liquidity risk. You'll notice that there's a time frame associated with each of these investments. And then, as always, our opportunity cost. We want to assess the risks and the rewards and make sure that it makes sense for right now. Part of our rationale for this investment is we are experiencing some volatility. We know that on average, the S&P 500 has a decline of 20% or more about every 6 years. The last one taking place in June of 2022. Also a consideration, I know this graph is busy, but what I want to highlight is each sector that's represented. And in particular, over the last 6 years, the green box represents the U.S. stock market, and we like to track that through the S&P 500, a major index that looks at the 500 largest U.S. companies. In 5 out of the last 6 years, the U.S. stock market, as represented in the green box, has been either the number 1 or the number 2 top performing asset class. So we feel that we've been at all-time highs. We also, having been experiencing some volatility, and know that it does happen as part of the market. So, as what many clients would expect of us is to be doing some of the behind the scenes work and creating what we consider to be a principal protected note on behalf of Bander clients. Here's an example. This comes to us through Morgan Stanley, and it's a 4-year market linked note. We'll be placing this note here later in the month of April, and we have a participation rate of 125%. And allow me to share on my screen here. What that means is that if the market or the futures index, as represented by the ticker symbol SPXFP, it's meant to track the S&P 500, were to be up 10%, well, then we would see a 12.5% return because of this maturity bonus. And that's by holding it 4 years, we will receive 125% of what that index does, the underlier. So here's 3 scenarios. Number 1, let's say that over this next 4 years, this S&P futures index performs really well and is up 55%. Well, because of our 125% participation, we would actually see a credit of 68.75% by Morgan Stanley to each of our investors based on that hypothetical scenario. Now, people will often ask, how are they doing that? A big part of it is that Morgan Stanley is purchasing call options and at-the-money call options. That's what allows this type of participation, and we receive this enhanced bonus amount because of our 4-year commitment. So this is a way that we are locking arms, using our investment power, giving a time commitment, and still having some good upside potential. Now, let's say that the S&P Futures Index performs more moderately and sees a 10% return. Well, that's where we would then receive a credit of 12.5%. So that's at the end of the 4-year term. This is a note that we have already locked in on behalf of investors. It will be a part of our models 1 through 6, and it will mature on April 30th of 2029. That's when we'll be credited. Now, the principal protection part is this. Let's say that this underliers, and this index is down 20%. Our protection is that then we would just receive 100% of the principal that was invested. So this is important, especially as we think about the future. We lock in some gains right now. This is what we feel is an opportunity for us to further the objectives within each of our model portfolios. Now, it's important to mention we're going to have a 4-year term. If it is sold early or prematurely, it would likely be at a discount, especially if the S&P index is down. Now, as with all investments, we have some risk considerations. We will include those as part of this video. And of course, welcome any questions that you may have. Your team, your Bander Wealth Management team, we're here ready to help and assist, and welcome any questions. If you have any specific items that you'd like to discuss relative to you personally, please feel free to reach out to our office. I hope that you find this educational content useful. We will be inserting this type of investment in the month of April and plan to continue to do so as we progress forward throughout this year. Thank you.